Guys, so today we are going to talk about interest rate, how your interest rate of your home loan or your loan against property changes with the repo rate. So all banks have their interest rate linked to the RBI repo rate only and nothing else. What is RBI repo rate? It is the rate at which RBI gives money to banks. For example, today the repo rate is 6%. Banks are borrowing from RBI at 6%, giving you at 8.5%, which means the margin of the bank is 2.5%. This is where the banks play, with their margins. Some will have 2.4 margin, some will have 2.6 margin. So bank to bank that varies. But the variable here is the repo rate. Whenever repo rate changes, your rate will change then in the same manner. Suppose RBI changes the repo rate by 0.25% up. Your rate from 8.5 will increase to 8.75. If RBI changes the repo rate down to 5.75, which is a reduction of 0.25%, your rate will also come down to 8.25. And this is mandated by RBI. So all banks have to ensure that in the same proportion at which RBI is changing the rate, your rate is also changing. Suppose today is 26 December and the bank's rate change the rate today. Your rate will change by 28 December in some banks case, by 1st January in case of some banks, or by 1st February maximum in case of some banks. So that is bank to bank, it may vary, but all banks have to change your rate in the similar proportion and there's no negotiation on that. Whenever you see a news that RBI has changed the repo rate up or down, you can immediately, check with your bank, when they are changing your rate, and they will mandatorily follow it. Now this applies for all public sector banks, which would mean SBI, Bank of Baroda, Bank of Maharashtra, or any other government bank. This will apply for all private banks, which would mean SDFC, ICICI, Federal Bank, Axis Bank, any private bank. It will also apply for all MNC banks, for example, HSBC, Citibank, Standard Chartered Bank, DBS Bank. So irrespective of whichever bank you take the loan from, they have to mandatorily follow the RBI repo rate norms. But this does not apply when you're taking a loan from an NBFC. NBFC would mean institutions like Bajaj Finance, Tata Capital, L&T Finance, Godrej Finance. So these institutions are NBFCs, non-banking financial companies, or a housing finance company. They don't really have to follow the interest rate changes because their rate of interest is not linked to RBI repo rate. They have their internal benchmark prime lending rate, and with the change of benchmark rate, they change your rate also. Now, because there are no pre-closure charges or part payment charges on loan, all the banks try to be in sync and follow, whether it is bank or NBFC. So that's about how interest rates move. I hope this was helpful for you. Let's wait for more videos to come. Thank you so much.